appreciate it, and we will let you go.
Thanks.
And we will move on to the Clean Energy Finance Corporation. If those we could approach the table, that would be great. Who's up for CFC? Welcome, Mr. Demuth. Thank you for coming.
Pleasure. Thank you for having us.
Do you have an opening statement that you'd like to address?
I do. Thank you, Chair.
Please go ahead.
And thank you for the opportunity of being able to provide this opening statement. We very much welcome and thank the Parliament for the recent additional $2 billion of capital allocated to the CFC's general portfolio and additional funding also to the Rewiring the Nation Fund, which was included in the mid-year economic and fiscal outlook, and was passed by Parliament in relevant appropriation bills receiving royal assent on the 14th of February. This is the first instance in the investment capacity of the CFC's general portfolio since we were established in 2012. CFC's investment commitments through the general portfolio include renewable energy generation, storage, property, electric vehicles, infrastructure and natural capital. It also includes capital for our asset finance programs, which provide discounted finance to households, small businesses and farmers across approximately 80,000 smaller scale clean energy investments. CFC has been very active in the first 6 months of this financial year, the 6 months to December 2024, with investment commitments of $1.1 billion made through the general portfolio, with total transaction value of $6.3 billion, representing an additional $4.85 of private sector dollars for each dollar of CFC capital committed, a strong indication of market interest in a diverse range of clean energy investment opportunities. We expect this additional capital to be particularly important for increasing our investment in much-needed renewable energy generation and storage projects. And storage projects, both of which are central to delivering on our investment mandate and the government's emission reduction targets. The government has also provided a top-up, as mentioned, for the Rewiring the Nation Fund, affecting the government's intentions for further Rewiring the Nation works. Rewiring the Nation invests to modernise our electricity grid and deliver new and augmented grid infrastructure. Late last year, in fact, CFC announced approximately $2 billion of capital to Transgrid for construction of HumeLink and VNI West early works in New South Wales. It represents CFC's largest single investment commitment. The infrastructure will deliver up to 2 gigawatts, 2,000 megawatts of pump storage to major population centres, being Snowy 2.0, with Transgrid modelling estimating this vast firming capacity will also enable the grid transmission of an additional 2,570 megawatts of renewable energy. We see these additional capital allocations as an important demonstration of the Parliament's support for the work of the CEFC, and I thank the committee and look forward to questions. Thank you.
Thank you very much, Mr. Demuth. We will go to Senator Cadell.
Thank you very much. Thank you for that opening statement. Just first things from your opening statement, and I'm hearing some of them the first time, so it's poor preparation by me, but I'll go there. Of the $2 billion to Transgrid, we just heard evidence this morning, regulated rate of returns between 6 and 7% specifically on that. So are Transgrid getting a discounted finance rate that they're getting a guaranteed rate of return on?
Their rate of return through their regulated asset base is something that's determined by Australian energy regulators.
We got that this morning. That was this morning. Yep.
And the finance that we're providing, in some part, is concessional. So some part of that capital is concessional. It's a combination of hybrid notes that allow Transgrid to kind of comply with its rating agency requirements and senior debt as well alongside other banks.
So even though they were getting a regulated rate of return between 6 and 7%, they couldn't name the absolute figure. We are subsidising some of it and potentially letting them get commercial loans at a lower rate by mixing their loan ratios as well.
Well, this capital is sort of provided in a kind of flexible way, and in some parties is concessional, but to allow shareholders or allow Transgrid to kind of meet its required business case and therefore accelerate and bring forward this project, which will ultimately be good for consumers and should ultimately reduce the cost of transmission and electricity to consumers.
I get that. It just seems odd that, when you've got a guaranteed rate of return, you're just getting your money cheap as you're making profit. It's just making extra profit for them, surely. The margin.
Well, there's Transgrid, as you know, is a privatised company with shareholders, and now the AER has gone through some changes and introduced financeability changes that take
capital
that into account.
Yeah.
That's right, but this predates that.
Right, understood. Thank you very much. So let's go. Sorry, that was just an aside from the opening statements. Going back to how much funding has been given under different projects and how much remains, can I just go through those one by one? So rewiring the nation, top up, how much has been contracted to date and how much remains unallocated?
I would take that on notice. Well, we can go through those projects if you wish. Let me just call them up.
Approximately $2.8 billion, Senator. Andrew Powell, I'm the CFO for Clean
I'm
Energy
okay with approximately,
Right, $2.8 billion of committed funding, including the approximately $2 billion to Transgrid.
Yep. How much unallocated?
Unallocated is around $16.2 billion.
Billion?
Billion.
Yep.
Yes.
Community Batteries Initiative? No funding?
We're not, no funding of community batteries.
Household Energy Upgrades Fund?
No, that's a separate fund of $1 billion, of which I think allocated to dates. Let's have a look at it.
I think we have left
345.
That's right.
345 million of the billion has been committed to date, Senator.
So 655 still to go, roughly?
Correct.
Do you know where the next round of that will be?
The next round?
Yeah, are they going? Right?
Well, we've got a whole, an allocation of $1 billion, so we're constantly kind of reviewing proposals as they come forth. So we've got a number of...
So anyone can put in any time and you'll assess it when it comes through. There's not formal...
That's true. We look, to kick it off, we ran an RFP process, got a very good response, and we've now implemented 4 transactions which represent that $345 million. But in terms of the balance of it and completing it, we would hope that would take place over the next 18 months or so.
Okay.
And just in the interest of transparency, Senator, 531 million of that original billion has not yet been credited to the CEFC special account. So whilst there's 655 remaining, we're still waiting for that 531 to come.
So you've got 124 in cash each yet. Right, okay. My maths teacher will be proud. In rolling either of these programs, are any unexpected delays or barriers, state approvals or anything like this on contracting and getting money out the door?
Sorry, Senator, you referring...
In either of those rounds, in Rewiring the Nation or...
well, they're quite different things, of course. So with Rewiring the Nation, they're large-scale transmission projects in most cases.
Yep.
So they will take time, and some of them, there are delays from time to time in terms of reaching FID with those projects. So, and that will continue to be the case, as I say.
And community consultation's big in these areas.
Community consultation is a significant part of that. With the Household Energy Upgrade Fund, it's really more a case of processing the various applications or proposals that we receive. So then they're less kind of driven by community consultation or other external factors. It's really our engagement with the market.
Okay. Moving quickly on while the chair doesn't notice. On the extra $2 billion, on the extra $2 billion allocation, what's the scope of that?
Well, as mentioned in the opening statement, it goes into our general portfolio, which covers a very, quite a broad range of sectors. As I say, renewable energy, transport, infrastructure, natural capital, for example. We do anticipate, though, a considerable degree of demand for wind, solar and storage in terms of helping the government deliver on the capacity investment scheme and to try and reach 82% renewables. So we have, we do see a considerable amount of that $2 billion will be used in that sector.
So things that are already under the CIS may be funded again or financed under this as well?
Potentially.
Yeah.
There are other projects that may not even apply under the CIS that may be, a renewable energy project that we would support. So we're not confining ourselves to capacity investment scheme projects.
I would hope not.
No, but it's not necessarily unexpected that we would support a project that would bid into the CIS.
I've got a concern after that answer and the Transgrid thing that there are many different buckets, shall we say, of funding between guaranteed rate of return, a capacity investment scheme, CFC finance, that people are double dipping their nuggets, so to speak, going, I'll take your guaranteed rate of return, I'll get discounted finance. I'll go to the capacity investment scheme and get money from there and then get dedicated finance here. Are taxpayers propping up private businesses twice in many of these instances where they're getting these guaranteed rate of returns and cheaper finance? So they're really double dipping or more. There's multiple places.
Not necessarily, Senator. I don't believe that's right. I mean, the capacity investment scheme obviously is a mechanism that's allowing various proponents to bid into a particular program to bid a certain degree of revenue underwriting, particularly to help them go and raise debt for these projects, in many cases limited recourse project finance debt. These projects are getting bigger and bigger. There's a sort of very significant demand on the capital markets, on the banking markets here in Australia. So they may also borrow in excess of what the capacity investment scheme would underwrite. So it's not really it's not a case of covering all their risks of return and revenue. At the same time, our participation in those projects in some cases may help the private banking market have confidence in these projects. May also, as I say, because there's such large-scale projects that so many banks are being called on that we can help play our particular role. And also, we don't expect to use concessionality necessarily. We'll be lending in many, if not most cases, on market terms. So there's not really a sense of, as you say, kind of drawing on concessional or beneficial arrangements in that regard.
Transgrid had some form of concessionality?
Transgrid had some form of concessionality, that is true.
Okay. Personal commentary slightly. I have some concerns when a lot of my constituents, people come to us and they're getting compulsory acquisition for transmission lines and all fear of that. I'd much rather make their income tax-free from that than give it to the company that's doing that to them. Do you look at the consultation process? Do you have criteria on the companies processing going out, like Transgrid, for example, how they engage with communities, meeting those guidelines to qualify? Is there certain hurdles they have to meet in how they treat communities?
We are very focused on social licence and community engagement with all the large infrastructure projects that we're engaged in, and particularly counterparties like Transgrid, who are undertaking some very large projects, of course, here in New South Wales. So yes, Senator, very focused on that. We make sure that they're engaged early in the right ways. So it's something that's a very significant issue for the CEFC.
Okay, thank you, Chair.
Senator Van, do you have any questions?
Quickly, I guess, the Rewiring the Nation Fund. So far there's 3 or 4 large transmission projects, is that correct?
Yes, we've announced 4, I believe.
So Project Energy Connect, VNI West, HumeLink and Central West Arana Renewable Energy Zone, is that?
Project Energy Connect was in fact announced before Rewiring the Nation, which was with Transgrid. We've announced Central West Arana financing, which we've done with Energy Co, the New South Wales owned entity that's kind of in some ways delivering that project. Yes, as you mentioned, AEMO, we've done kind of a financing there, the HumeLink BNI West project, and the fourth one.
The fourth one is the New South Wales electricity early works.
Oh yes, we provide a liquidity facility, the scheme financial vehicle in New South Wales as well, as another means of kind of helping roll out New South Wales RTN program. So yes, four projects have been announced so far.
But so far, all transmission projects?
All relate to transmission, that is true, yes.
Given that it's accepted that transmission only solves a small part of the problems we're facing with the transition, is there, you do have scope within the RTN fund to fund generation and storage, do you not?
We do, particularly long duration storage is contemplated under the investment mandate for Rewiring the Nation. To date, we haven't made committed capital into one of those projects, but we are engaging.
Senator, that's why the
Sorry,
general portfolio recapitalisation.
Sorry?
That's why the general portfolio recapitalisation is so important, because that's where most of the generation and storage that we fund comes out of that bucket rather than Rewiring the Nation. So that original, it's a great story. The CFC was originally capitalised with $10 billion, and that $10 billion it's actually on its second rotation, and the government's given us another two to kind of keep the movement going.
Terrific. So Rewiring, the RTN fund will only be used for transmission, is that?
Not exclusively. As I say, long duration storage is included in there. But we do have a very significant pipeline of transmission projects. So AEMO in their ISP say that there's $16 billion worth of transmission that needs building under the ISP. You've got $19 billion to spend. Either you're funding all of it or there's going to be funds spare. Any thoughts on where those investments might go? Yeah, well, we as mentioned, have a pipeline, of course, and in many cases informed by the letters of intent that have been struck between the government and respective state energy ministers, most notably New South Wales, Victoria, Western Australia, the Northern Territory and Tasmania have all entered into LOIs. So, there are a number of projects that have come out of that, notably big projects like Marinus Link, for example, very big projects. So there's a pipeline that is informed by, the government's plans that they have undertaken with the states, as well as, as you mentioned, AEMO's ISP as a guide to the sort of key projects that the RTN monies should be investing in. So we've got a pretty full order book, if you like, a fairly large pipeline of deals that will fit into our $19 billion envelope at this stage.
So going above and beyond what AEMO have set forward as our transmission needs?
Well, I mean, the ISP is done for a certain sort of outcome, if you like. With the Rewiring the Nation pipeline, there are, there's $3 billion in WA for projects up in the Pilbara that we hope to do. That may not necessarily be in the ISP, for example.
Yep, that makes sense. And the RTN is subject to you've got a higher risk appetite for the funds invested in there. Does that then allow you to look at, it's shelved now, but the Pioneer Burdekin pumped hydro project, would that have been kept on
it certainly is in
track?
scope, Senator. Yeah, I mean, it's a pump storage project, long duration storage project. It would be within scope of the RTN if it was, a live project. But yes, and the the
was
risk.
that brought to the CFC?
Only in a very preliminary way. It's not currently on our list projects.
Great. Thank you. Thank you, Chair.
Thank you, Senator Van. Now, you guys have been around quite a long time.
We have.
Yes. How has your have you seen any changes in your sort of investments or how you're operating or the return you're providing to government over that period of time? Can you just maybe talk us through that?
Yeah, thank you, Chair. Yes, we've been going about 13 years or so investing, I'd have to say very successfully in this very significant clean energy transition that we've been going through. And we started off with $10 billion investing. And in our early years, I guess we had a very strong focus, of course, on the electricity sector. I mean, we still do, but it was the lowest cost of abatement, and it was where Australia's, most of Australia's emissions, or a great proportion of Australia's emissions were coming from. So our investment activity in the early days, the first wave of solar and wind in Australia, a little bit later storage, but equally investing in other kind of carbon-reducing pathways like, the built environment, infrastructure, agriculture, transportation. So that's, where we were focused for many years, and we were set a target return. I think you were asking about maybe return and how they've changed. We had a portfolio target return for many years of 3 to 4% above the 5-year government bond rate, which is very high. It's now changed. It's now dropped to 2 to 3% for this general portfolio, which is now about where we are. Kind of that portfolio is now targeted, or now tracking, if you like, cumulatively since inception. So we were sort of probably 1% below the original target because it was very high for a number of years, and now the general portfolio, those activities that I covered, we're squarely within. With the change of government, most recent Albanese government, of course, we were increased somewhat in size by 20.5 billion, so we've sort of increased substantially. And we got an additional 19 billion for rewiring the nation. We got another $1 billion for household energy upgrades, and we got another $500 million for a thing called the Powering Australia Technology Fund, which was about investing in high impact earlier stage companies. So, and then even, only a couple of weeks ago, we got a further $2 billion for that general portfolio. So that's meant, with those additional funds, if you like, and sort of dedicated areas that we have been given further appropriations, we've had to build out our teams, specialisation and skill. I think we've done a terrific job in rolling out the first phase of Rewiring the Nation, Household Energy Upgrade, and even the Powering Australia Technology Fund. We've made significant investments across all of those areas, as well as maintained our activities in the general portfolio around wind, solar, storage, household batteries, working with banks, non-bank lenders, and putting solar on people's roofs in a cost-effective way, and targeting, also a various range of demographics to do that. And I guess one thing, just coming back to your point of how's our investment returns or targets change, with the large infrastructure projects around Rewiring the Nation, some of those big infrastructure financings are being done at a concessional long-term rate. So that will show, will have an impact, a non-cash impact in our accounts. But in terms of cash terms, they're all very positive investments for the taxpayer, and they will be successful investments.
And so that concessionality, my recollection, the government has sponsored a rule change to ensure that gets passed on, so the concessionality that's being provided doesn't actually just go into the pockets of the transmission companies.
Yeah, the Australian Energy Regulator has introduced a financeability rule change, which means that if concessionality is provided to a transmission company, that's taken into account in determining the weighted average cost of capital, so that back to your point, that we particularly, and many of the financings that we're doing are with state-owned transmission companies, so where we provide concessionality, that is going straight through to consumers, and we are reducing the cost of electricity and the network charges that will be ultimately borne by consumers around the countryside.
That's good to know. How do you address the risk that you face in the investments that you're making and the projects that you're pursuing to protect your finances and obviously to protect the Commonwealth?
Yeah, thank you. Well, as you'd expect, we have highly skilled professionals out there looking for deals and, structuring those investments. They go through a very rigorous investment committee which operates under delegation from the board. If the transactions are too large or they have particular risk, we'll actually take them to our board, which of course is full of highly skilled investment professionals, lawyers and so on. And particularly with the Rewiring the Nation projects, which are in some cases multi-billion-dollar deals in a very specific area, we have the board's created a specialist subcommittee with representatives on that that may have been in the transmission kind of sector, that would sit in on that committee to give it another sort of set of eyes. So we make sure we make the right decisions when we're putting, very substantial amount of taxpayers' dollars into investments. And if I look back at the history of the CFC's investment over the 13 years or so, it has been very, very successful, and only really a very, very small number of loans have become impaired or been written off. Almost kind of, I think it'd be less than
5.
Yeah.
Sorry, less than
3 loans in the
two fully written off and 1 partly written off over the entire life of the CEFC.
Okay, so for those who don't know, how many years is that?
13
years.
13 years, cumulative investments in the order of about $17 billion.
Wow.
So it has been very, very successful, and so we're very proud of that. But at the same time, we are still out there trying to fill gaps, taking risks that others won't take, so we can kind of crowd in the private sector.
So I remember when you guys were first set up, there was an expectation of a much higher default rate, wasn't there?
There was, Senator, and I believe in the originating bill, the explanatory memorandum had losses estimated of about 7%.
Yeah. Yeah.
Yeah, so it has been financially very successful, and even if you look at our returns for many years now, even if you take our sort of net operating surplus, you take the implied cost of capital, the capital that we use, because we're equity funded, so it doesn't show a cost of capital, we still make a return for the taxpayer. So we're sort of self-funded in that sense.
Well, it's a testament to the skill and expertise of your organisation. Thank you. Does anyone have any further questions?
2 follow-ups on that.
Yeah.
When you just raised the implied cost of capital, are there any of your concessional-like loans below your implied cost of capital? There have been, not very often, Senator.
Not within the general portfolio, only within
Rewiring Nation.
Yeah.
To what, without knowing the individual ones, not commercial confidentially, what percentage of the funding roughly would be under implied cost of capital?
Very, because even
it would be a very, very small portion, because ultimately we're trying to recover the cost of capital and our own operating costs, and so you have to make a margin above the cost of capital to cover your costs.
Last question, I forgot in my other ones going through, you mentioned the industrial fund and reminded me how much has been allocated and how much, or contracted, and how much is allocated in the emerging...
In which fund?
In the industrial fund, the emerging technology fund.
Oh, the Powering Australia Technology Fund. Yeah, that's 500 million, probably about 150.
Yeah, there's 328 million remaining, so...
Yeah, just under 150.
172 mil used.
172.
Thank you very much.
Yeah.
I think just following on from that answer and just listening to the responses to those last questions, it just does remind me that over the last couple of years we've heard all sorts of criticisms of these kind of funds, about the National Reconstruction Fund, a range of these things. Mr Fletcher said in 2012 about the CFC bill, it is extraordinarily difficult to understand how anybody could imagine that this is going to be anything other than a spectacular financial disaster. It sounds a lot like what Mr Fletcher has said about a range of these kind of programs. And here we are at a point in time where exactly the same kind of fund has funded very important infrastructure for Australians, has delivered a significant return to taxpayers, and has built all sorts of industry capability that we didn't have before. It might cause some people to reflect on their hyper-partisan pessimism about Australians' capacity to do things.
On that note, Minister, again, congratulations, Mr. Loomer, to you and your team. It certainly is a very, very successful and productive organisation that you run, and achieving great things for the future of Australia. Given we are so close to the break time, I'm not going to call on the next agency until after the break. We will break now until 3:45, and we will return with the Climate Change Authority.
Thank you, Chair.